Yeah, certainly I think Jay Powell seemed fairly relaxed about the state of the US economy, seeing no reason to, panic. Yeah, we've seen weekly jobless claims, they're still fairly steady and around the mid
Yeah.
220s. Non-farm payrolls recently, not there's nothing overly concerning there, and I think it's a similar story here in the UK as well. Unemployment 4.4%. Yeah, wage growth slowed modestly for the 3 months, but it's still only just below 6%, and actually private sector wage growth actually ticked higher.
Mm.
So again, there's nothing at the moment to suggest that we're on the cusp of a significant slowdown, certainly in terms of the labour market.
Mm.
It's just the broader economic numbers and obviously what's coming down the pipe that I think an awful lot of people are concerned about. So, let's say the next
Yeah.
2 or 3 months should be interesting.
It is going to be interesting, although having said that, I wouldn't be surprised if, on a sort of global level, we don't end up slipping into, providing Trump doesn't say anything stupid, we don't end up slipping into a little bit of a lull. I was looking at the economic calendar for next week earlier, and I know we'll discuss that in a while, but it is a little bit barren in terms of top tier events, at least. I mean, you're really now looking towards that tariff deadline on the second, and then the next jobs report out of the States on the first Friday of April as the next kind of significant data catalysts for markets to get their teeth into. And then about a week after that, we roll into the start of Q1 earnings season stateside, which I think is going to be very interesting indeed, because it's the first time we'll have heard from these firms around, how they're adapting to this current uncertain environment,
Yeah, starting with the banks, obviously, JP
as
Morgan,
always.
Goldman Sachs, as always. I can remember when it used to be Alcoa, not anymore. Anyway,